Welcome back, everyone. I hope you're having a great day. And in this video, we're going to take a look at the top 3 stocks in Warren Buffett's portfolio. He is arguably the greatest investor of all time and has an incredible track record of outperforming the overall market. Buffett is the CEO of his company Berkshire Hathaway, which is one of the largest companies in the S&P 500 with a current market cap of $655 billion. And under this Berkshire umbrella, the company has full ownership of dozens of different brands that operate in some major industries, including insurance, railroads, and consumer goods. As well, Buffett has built up a public stock portfolio that has a current value of over $300 billion. And in this episode, we're going to discuss the top 3 positions within that massive public equity portfolio. And the total value of the 3 positions added up is worth over $183 billion, meaning that 60% of his entire public equity portfolio is allocated to the 3 companies we're going to go over today. So in this episode, we're going to break down the top 3 stocks in Warren Buffett's portfolio, go over the company's current operations, the current financials, and their future expected growth. So before we can jump into that first company, I'm going to ask you to please hit that like button and subscribe. I'm the Gen Z investor, and every single day we talk about the stock market, going over different stocks you can buy and any major market news. So please hit that like button, subscribe for the daily videos, and we're going to start off by taking a look at Buffett's portfolio and all the companies excluding the top 3. So we can see that coming in at number 4, we have Coca-Cola, then Kraft Heinz, Verizon, US Bancorp, and many more. And overall, the remaining companies in his portfolio add up to around $120 billion worth of value, and the top 3 add up to around $180 billion overall. So we can see that this company owns so many different brands under the Berkshire umbrella, some of the biggest names in the world, including Visa, Bristol-Myers Squibb, Kroger, Amazon, MasterCard, and many, many more. Overall, Buffett owns around 40 companies within Berkshire Hathaway. And we're going to focus on the top 3 in today's video and take a look at their current operations and how the company's been performing throughout the first half of 2021. And starting off as the number 1 company for this episode, which is the 3rd largest position in Buffett's total portfolio, we have ticker AXP, which is American Express. They trade for $164 per share and are up by 66% on the 1-year chart. The company has a current market cap at $132 billion. They trade with a forward PE of only 22.4, and they do offer a slight dividend with a current yield at 1%. And of course, this is a giant in the debit and credit card industry, and within that sector, they are the 3rd largest company, and in terms of purchase volume back in 2019, they came in 3rd behind Visa and MasterCard. And throughout 2020, the global pandemic really had a harsh impact on the entire debit and credit card industry. And all 3 of the top names saw a reduction in their total revenue and earnings for the past calendar year. But we do have some positivity that American Express was able to add 6.6 new cards over 2020. So even during a point in time when consumers were not spending their capital, they were saving and hoarding money, travel was pretty much shut down, American Express was still able to add 6.6 million new cards in the market. And one thing we can see is that over the past few quarters, the demand in new cards acquired continues to uptick. So to start out Q1 2021, they added an additional 2.1 million cards, which is a very strong sign. And if we take a look at their income statement over the past 5 years, American Express was a company that was expanding year after year. 33 billion to 33.8, 36, and then just under $40 billion of total revenue in 2019. Then of course, like I mentioned, in 2020, they did see a pullback to around $31.35 billion of total revenue. And then in the past 12 months, that has now grown to over 33 billion. So they are on their way of building it back up. So the entire sector was hit. It was not just American Express. And overall, this company still remains very profitable even as their sales declined. And their net income in the past 4 quarters is at over $5 billion. And similar to revenue, we have seen a recovery from the lows throughout 2020. And taking a look, this company does pay out a dividend as well. And as we all know, Warren Buffett is one of the greatest dividend investors of all time. And if you wanted to buy into American Express right now, the yield currently sits just above 1%. They have a very, very sustainable payout ratio of only 23% of their net income. So it leaves them a lot of room to continue to expand and grow the business while also increasing that payment year after year. And currently, their 5-year dividend CAGR sits at 8.2%. And the company has a dividend safety score of 80, meaning the dividend is considered safe at this current point in time. So right now, American Express makes up the 3rd largest position in Berkshire Hathaway's portfolio. And going forward, Wall Street analysts do like the company, and they're forecasting 22% annual expansion each and every year for the next 5 years going forward. And currently, the share price at $164 per share is actually above the 12-month expectation coming from these analysts at $154. And American Express is currently rated as a 2.4, which is directly between a buy and a hold at this current point in time. So though analysts are forecasting some nice expansion over the long term, right now, the price target is set below the current level with a little bit of a weak buy or hold on the company at this current point in time. And if we jump back over to Berkshire's total portfolio, we can see American Express coming in at number 3, just above Coca-Cola. They own 151 million shares of this company, and currently, Buffett owns 18.9% of American Express. 18.9% of this entire company is owned by Berkshire Hathaway, and that represents a market value of just under $25 billion. So position number 3 in the Oracle of Omaha's portfolio goes to American Express. And now we're going to continue on, take a look at the second stock in this video, which is actually the 2nd largest position in the portfolio, and that goes to ticker BAC, which is Bank of America. They trade for just below $42 per share, and on the 1-year chart are up close to 75%. So from the lows in 2020, this company has absolutely exploded. And right now, they have a market cap at $358 billion and trading with a forward PE ratio of only 13.88. And this is a dividend paying company as well, with a current yield of 1.72%. And Buffett loaded up on Bank of America during the lows back in 2020. And there's an article I want to show you. Published on August 6, 2020, it reads, Warren Buffett plowed an extra $2.1 billion into Bank of America stock within 12 days. Experts warn it could be years before he sees a return. And this is what I want to point out to you. Experts warn it could be years before he sees a return. So let's take a look at Bank of America from August 6, 2020 to today. So if we go back in time, on August 6th, the company was trading for around $25 per share. So Buffett bought in a $2.1 billion buy over a 12-day span at around $25. Fast forward to today, that position alone is up by close to 64%. So in less than a year, Buffett has seen 64% share price appreciation plus the quarterly dividend that he receives on that $2.1 billion investment. So whatever experts warned that he would not see a return for years were absolutely wrong. And I just want to share with you a quick point before we continue on with Bank of America. When you're researching a company, don't follow headlines. Headlines on articles on the internet are clickbaity. They want your attention, they want you to read them, and they want you to click the ads. So when you read a headline like this, right away, if you would have read this on August 6, 2020, and you were thinking about buying financials on the dip, and you see that experts are warning you're not going to see a return for years, it may have scared you away. But if you believed in yourself, you believed in the financial industries, you did some research, you spoke with a true qualified professional, and you still believe that financials were a good investment at that point in time, then you would have made a ton of money and would have been up 64% like Buffett is when everyone was selling out of the banks. They thought the banks were going to go down. They thought the banks were going to shut down with massive loan losses. Buffett doubled down and continued to add capital to the companies he believed in over the long term. And we can see less than a year later, it has paid off extremely well. In Bank of America, if we take a look at their Q1 2021 highlights, they've been recovering very, very fast. Their net income in the first quarter of this year came in at $8.1 billion. And we can see compared to the same quarter back in 2020, their profits back then were only $4 billion. So they grew by $4.1 billion, or pretty much doubled their profit year over year, which is a very strong sign. And back in April, the company announced a major share buyback program worth $25 billion over the next 12 to 16 months. So Bank of America, although they're not allowed to raise their dividend right now because of the Fed's restrictions, they have announced major share buybacks worth $25 billion. So as an investor in this company, your shares are going to be worth more over the next year than what they are now because there's going to be less of them on the market. And we can see at this current point in time, Bank of America has a market cap at $358 billion. So just saying they stay at this current level over the next 12 months, I understand there's going to be volatility, but just keep it simple. That means the company's planning to buy between 6 and 7% of their outstanding market cap back over the next year, which is absolutely remarkable, making your shares more valuable than ever before. And we can see at this current point in time, along with the massive share buybacks and the share appreciation, the company has a yield at 1.72%, while maintaining a very, very low payout ratio of only 23% of their net income. And their 5-year dividend CAGR, of course, has been affected due to the shutdown and the lack of increase over the past year, but it currently sits at around 29%. And right now, the company does consider to be borderline safe on Simply Safe dividends, coming in at a 55, but I do believe, in my personal opinion only, that this is a very bearish expectation. Bank of America would not announce a $25 billion share buyback plan if their current dividend was not safe, because a cut to their dividend would hurt the company much more than it would be if they didn't announce such a large package. So I think right now the dividend is safe over the shorter term. I think the company will maintain their payout very strong, and I think once the restrictions are let off and they are allowed to increase that payment, they will do just that. So overall, Bank of America is coming in at number 2. And again, if we take a look at the 5-year historical trend for their financials, year over year, total revenue was climbing to highs of around $87 to $85 billion. Then in 2020, like the entire financial sector did, they did undergo a pullback back down to 74. But now in the past 4 quarters, they already are back up to $80.8 billion of total sales. So the company is recovering very quickly from the 2020 lows. And going forward, analysts are kind of bearish on this expectation. They believe it's only going to be flat for the next 5 years. And taking a look at this current expectation, the $41.86 share price sits just slightly below the 12-month expectation of $43.50, and the company has a light buy rating on it right now, coming in at a 2.2. So this company doesn't really have much growth expectations coming from analysts over the next few years, but it still remains the second largest position in Buffett's portfolio. He believes in them long term, and as we know from the Oracle of Omaha, he's proven he's been right over a longer term period. And taking a look at his current position in this company, if we scroll up above American Express, we see Bank of America, ticker BAC. He owns 1 billion shares of this company, and at a current price of $41.86, that represents a total position value of over $43 billion in Bank of America, and he owns 12.1% of the entire company. So 12.1% of Bank of America is owned by Berkshire Hathaway, and that is the second largest position in Buffett's portfolio. And now as we transition into stock number 1, the largest position in Buffett's total portfolio that makes up over a third of its total value, that is ticker AAPL, which of course is Apple. He owns $115 billion of the largest company in the world, which represents an ownership percentage of 5.4%. And taking a look, Apple currently trades for $127 per share. They're up by 51% on the 1-year chart and have a current market cap at $2.13 trillion. The company is trading with a forward PE right around 24.7 and a slight dividend yield at 0.69%. And Apple, although they already are the largest company in the world, they continue to impress. Over the recent quarter, their revenue grew 54% year over year. A 54% expansion from the largest company in the world is absolutely remarkable. and they authorized $90 billion of share buybacks. So the company is returning so much capital to their investors, and add in their annual dividend payment. Over the next year, they're returning $100+ billion to their shareholders, which is absolutely remarkable. And Apple's business continues to expand. And going forward, the one key point of their business I'm going to share in this video is Apple service revenue. I think that's the future of the company. I think it will become their number one revenue activity over the long term, and I think it will become the most profitable part of their business as well. Apple services have extremely high margin, and they really drive up the company's total bottom line. And in the first quarter of 2021, they came in at just under $17 billion of total revenue. And of course, the entire service sector is made up of the App Store, Apple Music, Apple Pay, Apple Care, Apple TV Plus, Arcade, News, Fitness, and many more. And the company has a huge goal of expanding their service sector. They understand that's the future of the business, and owning these different software components in the Apple ecosystem can allow greater profitability for decades to come. So I'm a very big bull on Apple. It is the second largest position in my personal portfolio as well. And I think over the long term, this cash cow giant will continue to deliver through all of these different services. And if we take a look at the company's financials, over the past year, they've generated over $325 billion of total revenue. $325 billion of total revenue during the past year is absolutely remarkable. And we can see that number has grown from 215 back in 2016. And if we take a look overall, they are a highly profitable company as well, with over $73 billion of profits in the past 4 quarters. $76 billion of profits is absolutely remarkable. And we can see year after year, the company's net income is trending in the right direction. And next, if we take a look at the balance sheet, another very, very healthy company with a ton of cash on hand. Right now, their cash and short-term investments come in at around $70 billion. And if we take a look at their long-term assets, their total long-term investments sit at $134 billion. And this right here is made up of long-term US treasuries that are pretty much cash equivalents. So if we take a look at the $134 billion, add the total current cash and short-term of 70, that means Apple has over $200 billion of cash on hand, so the company has pretty much unlimited capital to make acquisitions, do research and development, expand their business, do share buybacks, raise the dividend. There's so much Apple can do with over $200 billion of cash sitting on the balance sheet right now. And what I love about this company so much, and why I'm a big believer in them, is their cash flow statement. Taking a look at their free cash flow is absolutely remarkable, and I completely understand why this is the largest company in the world. We can see back 5 years ago, they generated $50 billion of total free cash flow. Then 64, a slight year back down to around 59, then 73, and now in the past year, Apple has generated over $90 billion of free cash flow. There's not many companies in the world that are worth in total $90 billion. And Apple alone was able to generate that in cash in one single year, which is absolutely remarkable. And although when you buy into the stock, you are here for the long-term capital share price appreciation and the major share buybacks, the company is a dividend payer with a slight yield of 0.69%, a payout ratio that's pretty minimal at only 17% of their net income, and a 5-year dividend CAGR at 9.4%. So overall, this is not a company you buy for the dividend income, but it is a nice bonus that will compound at a fast rate for long into the future. And I do see Apple, once their revenue growth slows down, I'm going to guess 5-10 years in the future, I think the dividend yield will become very attractive. No matter what, as services continue to grow, this is going to be a cash cow business. And I think going forward, after they continue to do share buybacks right now, I think they'll transition into returning more capital in the form of a dividend over the longer term. And if we take a look, analysts are bullish on this company as well, and they're expecting 18% annual expansion over every year for the next 5 years going forward. The stock is considered a buy, coming in at a 2, and the current share price at $127 is very far below the 12-month expectation of around $160, coming from 39 different analysts. So overall, they are bullish on the stock. They're forecasting a lot of upside over the shorter term, And although Apple is already the largest company in the world, Warren Buffett considers it the best business to ever exist and definitely worth taking a look at for your own portfolios. So that was the number one company in the Oracle of Omaha's portfolio. We took a look at the top three in Apple, Bank of America, and American Express, and we can see in total his public equity portfolio alone is worth over $302 billion. So if we take a look at Berkshire Hathaway, $302 billion of public equity stocks, they have around $140 billion of cash on hand. That equates to around $440 billion of value coming from their public and cash investments alone. And if we take a look, the entire company is only worth $655 billion. And you have to remember, they own dozens of private label brands that are not public companies, including names like Dairy Queen, they have a railroad, they have Geico, and dozens of more, all coming into that underlying Berkshire umbrella that make up the remaining value this company provides. So overall, Berkshire Hathaway, one of the largest companies in the world, a top name in the S&P 500, that's been led by Berkshire Hathaway's CEO, Warren Buffett, for over 50 straight years. He's one of the greatest investors of all time, and I think he will continue to provide great returns under his company for long into the future. So thank you for watching this video to the end. We all know what we discussed. We went over American Express, Bank of America, and Apple, the top three positions in Warren Buffett's portfolio. Thanks for watching, and I will see you in tomorrow's video.